Welcome to 2-Minute Analysis. Our goal is to not only entertain, but provide value and insights about the investments you care about. Today's episode is from this user's request. So let's throw 2 minutes on the clock and dive in. Today, we are looking at Broadcom Incorporated, ticker symbol AVGO. Kicking things off here with the Quant rating system. It currently has a hold rating on the stock, and we'll dive into the factor grades and the metrics here in just a moment. Seeking Alpha analysts in aggregate have a buy rating on the stock, and that's 12 analysts providing coverage in the last 30 days. Wall Street has a strong buy rating in aggregate, and that's from 46 analysts providing coverage in the last 90 days. To learn more about how the Seeking Alpha Quant system and Seeking Alpha analysts outperform the market, visit the link in the description of this video. So let's dive deeper. This is a $1.75 trillion market capitalization company in the information technology sector and the semiconductor industry. Jumping into the valuation grade, it currently is an F grade, and well, that is due to things such as the price to cash flow forward being 52.95 compared to the sector at 20.29, as well as enterprise value to EBITDA is currently 42.99 compared to the sector at 15.74. However, I do want to point out that the PEG gap ratio here, 0.42 compared to the sector at 1.16, that's a 64% discount. So even though this stock looks expensive, it has a high growth rate, which investors should love. Jumping over to the growth grade, it is currently A-. We love seeing that the 229% return here for EPS diluted growth year over year is completely blowing away the sector at 12.63. And also you like seeing that the revenue growth forward is 33.51 compared to the sector at 7.68. Jumping into profitability, currently an A+ grade here. The net income margin of 31.5% roughly is completely blowing away the sector at 4.52%. Jumping over to momentum, which currently has an A- grade, that 1-year price performance is 117.72% compared to the sector at just 13.85. And lastly, bringing in the revisions, which is currently a B grade, while we have 33 up revisions and 2 down revisions for earnings per share over the last 3 months, and 31 up revisions and 6 down revisions for revenue over the last 3 months. Now, this is a dividend-paying stock, but unfortunately not too much. The dividend yield is 0.64% currently right now. Payout ratio is low, and they've been paying this dividend for 14 years. So the dividend safety grade is A+, dividend growth A-, dividend yield D-, and dividend consistency B. And if we go into dividend yield here, you can see that it's currently paying about half of what the sector usually pays in the dividend. So maybe investors get that change going forward, who knows? But that's going to wrap it up for this episode. If you have a ticker you want us to cover, add it to the comment section below. And don't forget to follow Seeking Alpha so you get notified when the next 2-minute analysis gets published.
We are not advising you personally concerning the nature, potential, value, or suitability of any particular security. You alone are solely responsible for determining whether any investment, security, or strategy, or any product or service is appropriate or suitable for you based on your investment objectives and personal and financial situation. This presentation is for informational purposes only. Content is presented as of the date published or indicated and may be superseded by future events. It represents my opinions, which may not reflect the views of Seeking Alpha as a whole. Past performance is no guarantee of future results. Seeking Alpha is not a licensed securities dealer, broker, or U.S. investment advisor or investment bank.